Vora is a bit of a newer partner this year with us. I absolutely love Vince. I think one of the best things about my job is the fact that I get to talk to people that are very, very smart about the market. And Vince is no exception to that. You really learn these methodologies when you want to make sure they're kind of incorporated into MetaStock properly and that they work well and all of that kind of stuff. And I would consider Vince very, very intelligent and a great trader and just a really nice guy to boot. So let's go ahead and get him on the stage, and let's turn the time over to him.
Hi Jeff, I'm here. Can you hear me?
Oh, perfect. Good. We don't have to. Great. We don't have to have a technical issue yet today. You had me a little bit nervous. How you doing?
I'm okay. Sorry, still trying to get over this cold, but otherwise I'm great.
Well, thanks for sharing your Memorial Day weekend with us. I'm gonna go ahead and let you start talking.
Great. Thank you so much, and thanks again for having me be a part of this event. I really appreciate it. Thanks again for joining us in Vegas. It was great. As Jeffrey mentioned, we just wrapped up our Trader Bootcamp in Vegas, and both Jeffrey and Steve Primo were there. Both were fantastic, and we hope to have them back in our next event. And I look forward to seeing everyone in person in Utah. But for today, I'm going to be sharing my favorite trade setup. It's something that, excuse me, we developed many, many years ago. Very simple. But has been very effective for us. So what I have for you today is just a few slides on my PowerPoint, and then we're going to spend the rest of the time on my live charting platform, okay? A bit about us here at Trading Wins. We are a group of pro traders with well over 30 years of experience. We're real traders and real teachers, and we've been developing our own strategies and trading systems and teaching people from complete beginners to experts around the globe. Now, in today's presentation, I'm going to share with you the exact same money management rules that myself and the other traders here at Trading Wins use on a daily basis. I'm also going to tell you exactly what you're going to need for this setup, and then, excuse me, show you on my charts, step by step, the exact setup we're going to be working with. When we get to this part in the presentation, I will ask you to throw out a symbol or two. It could be something that you're trading right now, or just something that you're thinking about. We will bring up a chart, we'll analyze it together, and we'll see how this system would have performed on that market, okay? And then, time permitting, we will answer as many of your questions. Which market do you trade most? Is it stocks, options, futures, or forex? Again, please type that into your chat. Well, pretty good mix right off the bat. We've got, actually I see quite a few forex, but a lot of stock and options as usual. Fantastic. I'm going to try to show you as many examples of each today as I can, okay? And one last poll question, on average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you very active, 51 to 100, or 100 plus? Wow. Okay, we have several in the 51 to 100 category. Excellent. I think you're really going to like what you see. This is something simple, as I mentioned, but it involves the components of technical analysis that have been proven to work over and over again. Now, as many of you, I'm sure, are aware, trading can be extremely risky. Please educate yourself first and do not trade with real money until you are completely comfortable with the system you are using. Now, let me show you how we try to reduce our exposure in the markets on a daily basis. First and foremost, you should never trade with money you can't afford to lose. Now, I'm sure you've heard this a million times. It is worth repeating. I truly believe in it. But what it's really all about is trading with an amount that's small enough that it feels completely insignificant to you. You see, it's so much more important how you manage a trade once you're in it than it is about selecting an entry. And when you're in a trade, you need to remain calm, think clearly, and be able to manage that trade according to your trading plan. If you're worried about the amount you have in there, you simply won't be able to do that. right? Also, you should never risk more than 5% of your account balance in any one trade. And if you have a larger account, you should seriously consider reducing this to 2.5 or even 2%. That way, you'll still have a sizable trade on, but you'll reduce your risk considerably. Now, I usually get a lot of backlash with this one. Curious how everyone's going to respond today, but you never should have more than 50% of your account balance active in the market at any one time. We follow this rule religiously. Reason being, there are so many factors when it comes to the markets that are completely out of our control. And any major news event or an event such as 9/11, for example, can really drive the markets against you. So this is twofold. One, to help you reduce the size of the loss should such a loss happen, but also to have money available in your account afterwards that you can put back into the markets and regain those losses. And with what I'm going to show you today, it really wouldn't take you very long. Also, you should spread your trades out. Always select the 1 or 2 highest probability trades per time frame. You're going to see many setups with this. You want to be selective and pick the best of the best. You know, recently we've seen a lot of volatility in the markets, a lot of back and forth. And there are days where the Dow might be up 300 points, S&P might be up 30. On days like that, you're going to get several setups to the upside. Well, if you jump in and you put in 5, 6, 8 trades, and the very next day the market retraces like we've seen a lot of lately, you're going to be in a big hole right off the bat. This is why you want to spread your trades out and select only the 1 or 2 best per time frame. A couple of other sayings we have, and especially for those of you just starting out, I'd really encourage you to write these down and walk away with them. Number 1, you will never go broke taking profits. Now, the answer I always get back on this one is, well, you will certainly go broke taking small profits. Well, once I show you just how small we keep our risk on each of these trades, you'll understand that even taking small profits, you will do very well with this. Also, it's never, never about whether you're right or wrong that's important. Leave your ego at the door when you sit down to trade. It is all about how much money you make when you're right versus how much money you lose when you're wrong. Okay? So, what will you need to trade this system? Well, just about any charting platform will do, be it a free one on the internet or a great platform like MetaStock. Reason being, you will be plotting just one indicator on your chart for this, and that is the 20-period simple moving average, nothing else. You won't even really need it, but it's a great visual aid. I'll explain why in a moment. There's also no need to go out and spend money on new hardware. All right, if you're watching this webinar, you already have everything you need. A few benefits of this. Excuse me, let me just grab a sip of my water. Okay. A few benefits. This will certainly work on any market. Stock options, futures, forex, globally, any time frame, any price level. We've traded this with $2 and $3 stocks. We've traded it with the monster stocks like Google, Amazon, Priceline, etc. You don't need a lot of experience with this at all. You're going to see that with just a short hour that we have together today, how quickly you'll be able to grasp this and spot this setup on these charts. Okay, it's so easy to spot. It has very clear entry and exit points, and it is very effective. It can be used as a standalone system or as a great complement to whatever it is you're trading with right now. So, a bit of background on this strategy before I show you. You know, when we first sat down to create this many years ago, there were 5 things that we considered must-haves. One of them was it had to be simple to spot on a chart. We didn't want anything overly complicated that would cause us to miss setups. The other thing is it had to be used on any charting platform, which it certainly can be. had to be easy enough for just about anyone to use, but more importantly, had to have extremely low risk. I'll show you just how low in a moment. But most importantly, it had to be consistently profitable. And we've been using this for over a decade, and through all types of different market environments, and it has been extremely consistent for us. So, once again, there are only two components that we're going to be using here. First, I've talked about the 20-period simple moving average. Now, just so you know, we have tested this with exponential and weighted moving averages, different time periods. We've always come back to the 20-period simple moving average. It works best, and that's probably because it is the most widely used moving average out there, both by professionals as well as retail traders. The second component, or the second thing we're going to be looking for on our charts, is an engulfing candlestick pattern. Now, many of you, I'm sure, are very familiar with this. We use it a little different, but if for whatever reason some of you are not familiar with it, no worries. I'm going to draw this out for you. I'm going to explain exactly how and why we use this. Okay. So before I get to it, for the benefit of those just starting out, a simple moving average is calculated by adding the closing price of the security for a number of time periods and then dividing this time period. So I'm just getting a pop-up here. Okay, never mind that. Dividing this total by the number of time periods, just a straight average. The engulfing pattern is actually a reversal pattern that can be bearish or bullish depending on whether it appears at the end of a downtrend, which would be a bullish engulfing, or at the end of an uptrend, which would be a bearish engulfing. Now, rather than explain it to you off this small diagram, let me bring up my live charts here and show you exactly what I mean. Just give me 1 second here. All right. Here, you should be able to see a chart of Apple. Now, there's a couple things we always look for when we bring up a chart. One is trend, one is momentum. And that's where we use the 20-period simple moving average. It's such an effective tool. It helps us clearly spot what the trend is, but not only that, exactly what kind of momentum we have. And we judge that momentum by the slope in either the candles, okay? And this is where the 20-period moving average comes in. Or we can use the moving average because it pretty much draws it in for you. All right? Now, when it comes to momentum, you can have slight momentum in your favor, you can have slightly more, or you can have some very significant momentum. In other words, the higher that slope, the better. Okay? And it works exactly the same way in a downtrend. Okay? You can have slight momentum, slightly lower, or very significant momentum lower. The more significant that slope, the better. Okay? So let me draw out the actual setup for you here and show you exactly what we're going to be looking for. For a long trade, what you want to see is a move higher, and again, the more significant that slope, either in the bars or the moving average, the better. Then you're going to wait for some kind of pullback or consolidation. And it's in this point here that you're going to be looking for that reversal pattern in the form of a bullish engulfing bar that will tell you that this retracement or temporary consolidation is over and that this trend is going to continue higher. Okay? And the reason why this 20-period moving average is so effective is because when you do get a consolidation or a pullback in the stock, it would be easy to mistake that for downward momentum if you're going off the slope of the candles. But when the 20-period moving average maintains its slope, then it helps you understand that this is merely a temporary pullback before a continuation higher. Okay. Now, what does an engulfing pattern look like? Looks like this. You're going to see something like this. And there's a difference here. Sorry, let me redraw that. There's a difference here between the setup and the actual trigger. Okay? So for purposes of the setup, we're only interested in the bodies of the candles, not the tails or the wicks, just the bodies. And what we're looking for is for the body of the candle on the right to completely engulf the body of the candle on the left. They can even be at the same exact level, top or bottom, but the candle on the left, the body of it, cannot exceed the body of the candle on the right. So this is exactly what the setup would look like. The only difference is we want this candle, the engulfing candle, okay, to be green, all right, for a long play. The previous candle can be any color, but this one we want to be green. We really want it to close as close to its highs of that period as possible. The higher it closes to, the closer it closes to its highs, the stronger that move tends to be. Okay. Now, for the actual trigger to get you in the trade, what you're looking for is a trade that is one tick above the absolute high of the engulfing bar. Okay. Now, for the trigger, we do include the wicks and the tails. So it's the absolute high of that bar that you want breached. You want one tick above that is your entry, and your stop, and this is the crucial part, your stop goes just below the absolute low of that candle. This way, our risk is always contained to the range of that one bar. Okay? Same thing goes for a short trade. We're going to be looking for a move lower. Again, the more significant that slope, the better. We're going to be patient and wait for some kind of pullback or consolidation. And then it's in this area that we're going to be looking for a bearish engulfing setup to tell us that consolidation is over and that move is going to continue. Now, the bearish engulfing setup is going to look pretty much identical to the other one. Let me just redo this. Again, it's going to look exactly the same, except that this time, the bearish engulfing bar here, we want that to be red. The previous one can be any color, but we do want this one to be red. Again, we want it to close as close to its lows of that period as possible. So that's the setup. Again, for the setup, we're only looking at the bodies of the candles. But for the trigger, we're including the wicks, and we're looking for a trade, in this case, one tick below the absolute low of that candle. If we get that, we go short, and our stop goes just above the high of that same candle. Again, the risk is contained to the range of that one candle. Okay, so let's look at a few examples here. And you can see that in this case, we had a nice slope up here on Apple, whether we judge it from the candles or the moving average. But then we had a period of consolidation in here. Okay, and so during that pullback, we're patient and we're waiting for a bullish engulfing setup, and we get one right here. Okay? You can see here, maybe I can zoom in a little for you. Right in here, you can see that the body of the candle on the right completely engulfs the much smaller body of the candle to the left. To trigger us in, we're waiting for one trade or one tick above the absolute high of this engulfing bar. we get that here. Excuse me. We get that right in here. That's our entry. And here is our stop. Okay? Look at the range of that one bar here, from high to low. Okay? Low is 108.40, high is 109.75. So basically $1.35 of risk. Okay? But what happens next? Boom. That's exactly what we want. And there's a couple things here that you must be aware of. First of all, most trades that you're going to see trigger with this setup move in your favor immediately, which is huge for a couple of reasons. Number one, remember what I said about how important it is to manage a trade once you're in it, to be able to think clearly and remain calm? Well, if it's in profit right away, you'll be able to remain calm much easier. But secondly, when I asked the poll question, most of you say that you trade options. Well, as you know, if you get into an option trade and it moves against you, then to make back that premium is going to require a much greater move to the upside. It's going to make it much more difficult on you. But if it moves in your favor immediately, it's huge. Okay? Now, there are a couple of rules that you must be aware of whenever you get a trade set up like this. Rule number one is that should this stock trade below the low of the setup bar first, before ever trading above the high, this trade would be disqualified or negated. Okay? That one rule alone will save you from most losses. In other words, most trades that will not work out with the system are not even losses. They're just disqualified trades. Okay? Rule number two is that if two more candles complete and you still have not gotten a trade above the high, you also disqualify that trade. Reason being, obviously the momentum wasn't as strong as we initially thought. Okay, let's run through a few more examples here, and so I can show you exactly what I mean. All right, so here we have a chart of United. Again, one of the two things we're looking for: trend and momentum. And how do we judge that? By the slope of either the candles or the moving average. And you can see here we had a very nice slope throughout here. Okay? Now, we're patient, we wait for a pullback here because the moving average has not rolled over. It has maintained its slope. That tells us that this pullback is only temporary. So what are we looking for? We're looking for a bullish engulfing setup. Our reversal pattern to tell us that pullback is over and that trend higher is going to continue. And we get it right in here. See this body completely engulfs this body. Now, for the trigger in, we're looking for a trade one tick above the absolute high of this engulfing bar. This little bar here on the side actually traded 3 cents higher than this. So we were lucky to get in here before the gap. Now, again, it takes off right away, which is huge. But I wanted to show you this example because what do you do if the very next day you get a gap? What if we didn't have this little bar here and the entry was on a gap? Well, you have to reassess your risk because your stop is still going to be just below the low of that one bar. Okay, but if your entry isn't one tick above anymore, if it's up here, now you have much greater risk. So if if that's too much risk for you, just disregard it and move on. There will be plenty of other setups. All right. Let me show you a couple of other examples here, and one of that has several trades that were actually disqualified. So here's a chart of Mattel. Now, if we look to our left here, right over here, excuse me, let me show you. I apologize. All right, right in here, we had this nice slope lower. We can move this over, show you clearly. Had this nice slope lower after this gap down on earnings. And we get this nice bearish engulfing setup. So what are we looking for here? We're looking for a trade one tick below the low of that bar, right there. That would have been our entry. But what happens, the very next bar, it actually trades above the high. So it disqualifies that trade. Okay? After a few more days here, we get another setup here, right here. There's another nice bearish engulfing bar. Again, we're waiting for a trade below the low of that bar. Do we get it? No, we get two more candles that close without breaching that low. So again, we disqualify that. All right? So we're patient. What else? What do we see next? Right in here. A nice setup. This time, we get a nice break of that low right here the very next day. Okay? And what happens? Boom, it explodes. And that's exactly what we're looking for. It's textbook. Okay? A little while later, and see here, in this one, we could say the moving average was a little flat. So we disregard that trade. Okay? Again, you can be very selective with this. Here's another one. Okay? What happens? Boom. Takes off. Let's look at a couple others. Starbucks, very popular stock. Many of our members trade this over and over again. And if we look again, what are the criteria that we're looking for in this setup? One is trend and momentum. If we look to the far left, did we have that trend and that momentum here, judged by the slope in the bars, and especially in the moving average? Okay? Then we get a pullback, and what do we get here? We get a nice bullish engulfing setup. Sorry, I'll redraw that for you. Okay, we get a nice setup here. Now, the key here is the pullback does not have to end, or I should say, it doesn't matter if it ends in front of the moving average, if it overlaps the moving average, or if it goes beyond the moving average. What is important here is that the slope in that moving average is maintained. Okay? If this pullback goes too far, this moving average is going to start rolling over and flattening out. And if that happens, you've lost momentum. You no longer want to take that trade. All right? But again, it triggers by trading one tick above the high of that bar, and off it goes. A little while later, exact same thing happens in here. Now, can anyone tell me the difference between this setup and this setup? Can you spot it? We have a nice slope on both. We have a nice easy pullback on both. We have a nice bullish engulfing bar on both. What is the difference? The difference is in the size of the engulfing bar. So look at the risk of this bar, the range of that bar. Remember, your risk is contained to the range of that engulfing bar. Okay, so in this one, it's about 70 cents or so. It's still very, very small. But in this one, it's even smaller still. All right, so that's the key here. Both work out very nicely. Okay, but I often get asked, well, can I trade this with a very small account? Well, yes, you absolutely can. And first of all, you can trade with just one option contract or one lot of shares. But to further reduce your risk, be very selective and choose the trades with very, very low risk. Here, there was another nice one in here. Okay. And there was actually one recent one in here. So it works extremely well. It also works on futures, for example. Let's look at crude oil. This drop that we saw in crude was massive. No one was really expecting the magnitude of this drop. But regardless, all we're doing is looking for trend and momentum judged by this slope, okay? And which was definitely there. And then we're being patient and we're waiting for these setups. Like there was one right in here, okay? Beautiful. Another one right in here. And look how small that risk is compared to that move. And this is the key, okay? It's not rocket science. It's just a few components of technical analysis that have been proven to work over and over again. And what we've done is wrap a few rules around it to take advantage of it. One, to limit risk by those rules surrounding the entries. And two, to capture that gain. If you look at this, not only, okay, and you don't have to take my word for it, you can go back with yourself on charts and look for these setups over and over again. What you're going to find is you're going to see more winners than losers, but the key here is that when you do lose, it's contained to the range of that one candle versus your winners, which are huge. Now, no one's saying you're going to capture the full move. None of us have a crystal ball, all right? But with the exit strategies we use, we capture the bulk of those moves. Now, I'm going to do something that for a strategy designer like myself is probably the scariest thing to do. I'm going to open it up and ask you to throw out any symbol you want. We'll bring it up and we'll see how that would have worked. I'm actually going to bring on our coaching coordinator, Raul, to help me here because I see there's a ton of questions as well. He's going to help me read it off, and I'll focus on the chart. That way we can try to cover as many as possible. No?
It's always a pleasure to be here. Do you know what I'd be doing right now if I wasn't here?
Sleeping?
No, I'd actually be at a kid's birthday party.
Oh, well, there you go.
Yeah.
So I saved you, isn't it?
Well, I don't want to say that in public. Your kids are a little bit older now. You don't have to go to those things.
That's right.
All right, you ready?
Sure.
Samantha's the first one in with SWKS.
SWKS. Let's have a look at SWKS. Oh, very nice. And this is exactly the kind of chart you should be looking for, okay? One thing I like to do on weekends is take a couple of hours and flip through charts and find charts that have a beautiful trend like this. And just a nice slow grind, higher or lower, it really doesn't matter. But these are your money-making charts. Let's have a look through this to see if we can find any setups. And there was one back in here. Again, what are we looking for? We're looking for that slope. That's the key, all right? And when we get a pullback, we got to make sure that slope is maintained. Now, remember that the bullish engulfing bar needs to be green. The one before it can be green or red. It really doesn't matter. And then for your short trade, you're looking for a red bearish engulfing bar. The previous one can be any color. But there's setups here throughout. There's a beautiful one right here. And there's another one here. And again, this is another great example of what I just talked about. Look at what's the difference here between these two? When you see this, you should be able to immediately spot the fact that the difference is in the risk. This is a much wider range bar. Okay? Still very low risk compared to the potential gain here, because I can tell you, you'd be in this trade up until this area up in here. But right in here, look at how small that bar is compared to that move. And you don't need to capture that whole move. Just capturing the middle portion of it compared to your risk, it's incredible.
Bonnie's joining us from Milan.
Wow.
She wants to know about VMC.
VMC, okay. Let's see. VMC. Okay, great. Vulcan Materials. Let's see. Let's have a quick look through this. Let me see if this was one. I believe it was. Close. Yep. Actually, no, just missed, but this one was right here. And then we've got, we got a real nice one here. You'll be able to spot these very quickly with very little practice. I've been doing this for a very long time, so I can quickly spot these. But again, look at the difference here between the risk and the reward. The risk is the one candle. That's it. You know, how many winning trades would it take to make up a few losses? You know, not many. And I can tell you, after doing this for many years, I always have more winners than losers. But what's key here, let's not overlook it. What's key is that momentum. When you're trading with trend and momentum in your favor, you've already won half the battle. Okay?
Scott trades currencies.
Sure.
Can we take a look at US dollar CAD for him?
Sure. Let's have a look. US dollar CAD. Another nice looking chart. I already see many setups along the way here. There was one in here. Let's see. Oh, there's another nice one here. Let me just confirm this one. Yep. And here. Where else in here? Although this was a wide range bar, but that was a nice setup as well. Most recently, to the short side, right in here. Oops. So, some fantastic trades on US CAD. Again, it doesn't matter whether you're trading futures or forex or stocks. The rules are the same. Chart setup is the same. It's straightforward technical analysis.
Scott says thank you. Jeremy says US dollar, Japanese yen.
Japanese yen, sure.
He did say please as well.
For sure. So, remember, the toughest time to trade are these periods of consolidation, or these sideways chop periods that we talk about. That's where you're going to get stopped out the most when you're trading. Well, this, with the rules we've wrapped around this, it helps you avoid trading during those periods completely, and only focus on the periods that have a slope. Now, you see this trade here? Right in here. You see the slope wasn't too dramatic, right? What I do myself on these is if the slope isn't very dramatic, I then look at the size of that bar. And if it's small, I still take that trade. Because when it works out, boy, does it work out. Look at that move on the yen versus the risk we had on the table there. That's incredible. If it was a wide range bar and the slope was minimal, I probably would not take that trade. Okay. More recently, there was one in here. Okay, so it works again. You can check it yourself. Any market, any time frame, it works well.
Most popular question during the session, as
Sure.
I was watching it, was does this work on different time frames? I know you were showing dailies.
Yeah, absolutely it does.
So let's answer a question for Brent. He was saying GT
Okay.
on a 1 hour time frame.
GT on a 1 hour, sure. Goodyear tire.
Everybody wants to be a day trader.
Yeah, it's starting to regain popularity. For a while, it had gone away. Now it's starting to come back. But before I switch to that, since we're on the daily, let's just cover that. And you can see here, I can quickly see some really nice setups here on Goodyear tire. There's one right in here, and another one. Oh, and actually, I'm glad I did this. It brings up another point. During a sustained trend, you're typically going to find multiple opportunities to enter. So how do you handle it? Let's say we got in this trade, and then suddenly we're presented with this setup. How do we handle that? Well, if you're more of an aggressive trader, you can add to your position at each new setup. If you're more of a conservative trader like I am, I would just maintain my original position and take these new setups as further confirmation that I'm in the right trade and that I should continue staying in there. But let's flip to the 1 hour time frame here and see if we can find any setups. Ignore these. This is what we drew on the daily. Let me remove those. And let's see. Oh, there's a nice one right near. That's a beauty. That worked out real nice. Look at this. And again, the reason I call these beauties, I really like them, is I look at risk first. I'm extremely conservative, and I look at risk. And look how small that risk is. I mean, how can you not make money on that? It's just ridiculous. Okay. What this does is it helps make trading easy for you. That's all it is. Because when you have trend and momentum on your side again, it's just making it very, very easy on you. Not only is it easy to spot where you should be getting in, but how easy would it be to manage a trade like that, right? And now we're getting another orderly pullback. Look at the slope on this. It's not changing at all, which means this should be temporary. If we get another reversal pattern here in the form of a bullish engulfing mark, we'd be all over that, okay?
Chris F., we've got a few Chris's on. So Chris F. was asking about the US dollar, Great British Pound.
Sure. The currencies work really well. Now this is an hourly.
Now he was asking on a shorter time frame. Are you able to do something shorter than the hour?
Yeah, we actually have. I really like the 15-minute and the hourly myself, but we have many members who use it on the 5-minute, 10-minute, etc.
Are you able to do a 5 for a demonstration here?
On the British Pound?
Yes.
Let's have a look. Let's see what we come up with. We're going to have to span out a little here. Let's see what we can come up with. There was one right in here, and I mean, wow. I can't believe I missed this one this week. Look at that. That led to that insane, just insane. Let's go across and see where else. Again, you know, when the moving average is flat, you don't even want to look at it. Switch charts, look at something else. But when it's trending, boy, here's another one right in here. Okay? Boom. Just takes off. Even when there was actually a similar rate, a setup right before that. Right in here. And when, wow, you know what? We're seeing it again. Remember, what was that symbol? Bro, we did it on the presentation the other day where we saw setup after setup after setup.
Was it Nike that we did?
Ah, Nike. Yeah, can I show you guys Nike? Let me show you Nike.
Everyone is saying no, they don't want to make money.
Let's have a look. Let me show you Nike. What happened here with Nike? Okay. Oops. All right. I'm going to leave it here, and then that way you can see this. I actually might go one more there. All right. So on Nike, this was a gap on earnings on Nike here. Now, right after earnings, this thing collapsed, and it was a pretty substantial pullback. But look at the moving average here. Okay, basically didn't move at all. Okay, so we knew that this pullback was just temporary. Well, we got our first setup here. Now, the first bar was a pretty wide range bar, so it might be too risky for some. Well, what happened next? Boom. Another setup. What happened next? Another setup. Happened next? This is something that we don't see very often. sorry, right in here. We don't see this very often, but we saw this on Nike, and it was just insane. It was one setup after another, after another, after another. It just kept going. It was crazy. And that's because the trend was so strong and the momentum was so strong. Okay, that slope is like having a wind at the back of the candles, just pushing them forward. And so if you're an aggressive trader, boy, you could have added to this over and over and over again. That would have been your trade of the year right there. But even if you're like me, very conservative, probably would have been in on this one here. And how easy would it be to manage that? Insane. But that doesn't happen very often.
Vince, it's 9:49.
Yep.
I've got enough questions probably to keep you busy from now until your trip to Utah with Jeff. So why don't you wrap up your presentation, and then we'll get to the questions as well.
Okay, so let me just go back and recap here for a moment. And okay, so just to summarize, what I've showed you today is a system that you saw can work on stock, options, futures, forex, globally, any time frame, any price level. It's basic technical analysis. All right, you saw just how easy it is to spot the trade setup on a chart. Okay, it is strong enough to be used as a standalone system, but a great complement to whatever else you're using, because all we're putting on there is that 20-period moving average, nothing else. All right, but the real nice part of this, as you saw, it tends to move in your favor immediately, and even more importantly, with those rules that we wrap around it, the majority of trades that don't work out are not losers, they're just negated trades, all right? So I know there's a ton of questions. I will try to answer as many of them as I can, but beforehand, excuse me, let me tell you about a pro class we have coming up next Saturday, May 30th. From 1 p.m. to 3 p.m. Eastern. I'll be teaching this class. It will be recorded in case the time doesn't work for you. But what I'm going to be covering in this class is the full system from entry to exit, including 5 different exit strategies. But we will focus on the one that myself and the other traders here use most often. Also, I'm going to throw in a very unique way of adding support and resistance that'll really increase the accuracy of this. Now, what you've seen is obviously it's highly accurate as it is. Where this piece comes in handy is on a night where you might have 5 or 6 different trade setups, and you're trying to select the 1 or 2 that have the highest probability of success. Well, this is going to make all the difference with that, along with 2 Fibonacci tools that I'm going to teach you. One to help you pinpoint the entries, and 2, a second one that will help you set targets as well. In addition to this engulfing setup, I'm going to teach you 4 additional trade setups that you can use. In other words, when you're at that point where you're looking for that reversal signal and you're looking for those bullish or bearish engulfing patterns, there are actually 4 other setups that you can look for at the exact same time. And any one of those, along with the engulfing, can get you in a trade. So this will help you be very, very active in the markets. As a bonus, I'm going to give you the one tool that will save you hours and hours of research every week. It's something that will help you spot a setup immediately. And or I should say the most popular part of this class is near the end. We do a search for real-time trade setting up that coming week. I will share my watch list with you. I will go through chart by chart with you. Together, we will walk away with a list of trades that we can all put on and make money. Okay, the link for this class is tradingwins.com/signal. Now, before you sign up, let me tell you exactly what you're going to get so you know that it's right for you. Okay? As soon as your order is processed, which takes about 30 minutes, you will receive an email with a link to a recording of the previous class we did just a couple of weeks ago. That way you don't even have to wait till next Saturday. You can watch this and start trading right away. In addition to that, we're still going to save you a live seat at the pro class, but we're also going to throw in a 30-day membership to our pro service. And this is one of the best parts. Let me tell you a bit about that. Our pro service is the most powerful way to get access to all our systems, because this is just one of them. You're going to get real-time trade alerts showing entries, stops, and profits. You're also going to get premium nightly videos that teach you how we trade the various systems. Those come out every Sunday to Thursday. You get access to our members-only weekly chat. We have it every Thursday morning from 10 to 11 a.m. They're also recorded. You get to come into our room, ask me excuse me, any trading-related question you like. You also get access to a members-only, our library of past educational sessions, and you can reattend any pro webinar you've paid for as many times as you like. So it's a great value. You're going to get all of that free for 30 days. In total, it's a $691 value, but as a special promo for this summit, anyone on here, all we're asking for is $97. Okay, we really want to give you a chance to see what Trading Winds is all about, and hope you join us. Again, the link is tradingwinds.com/signal. Now, I do have to tell you, we do have to unfortunately limit this to 25 people. Reason being, we get people from different backgrounds, different levels of experience, and there's always a ton of questions. That's another reason why we send out the recording of this video ahead of time, so you can watch it, bring your questions to the class. Our goal for this class is to answer your questions completely, all of them. That way you can walk away from this class trading this system completely on your own. That's our goal. So for that reason, we have to limit it. The recording you're going to receive of the previous class is almost 3 hours in length. Again, my promise to you is I will stay as long as I have to answer all your questions, okay? Again, you're going to get the full system, entry to exit. I'm also going to show you a very unique way of adding support and resistance that will really help you pick out the highest probability trades. I'm going to teach you the 2 Fibonacci tools, show you 4 additional trade setups to make sure you're active in any market environment. I'm going to give you that bonus tool that will save you hours of research. And again, we're going to do a search together for real-time trades. We've had some great feedback from our members who have taken those trades. And really, whether you're trading just one option contract or even just one lot of shares, to make back $97 will take you no time.
And you haven't left me a lot of time. 4 minutes for about 400 questions.
Wow.
First of all, I want to say thank you to Abraham, David, Curtis, Robert, and Jeffrey, who just signed up for the webinar. That's Jeffrey with a G, not
right.
Jeff Gibby. Jeff Gibby, I think we can probably get him in, give him a comp.
Yeah, I think we'll give him a complimentary seat.
Okay. Jeff's asking, this is Jeff L. asking, please comment on the relationship of the 20 SMA versus the 50 SMA?
You know, we've tried many of them. We've always come back to the 20. It's the most reliable. Trust me on that.
How much of the discussion during the class is going to be on options?
Oh, good point. Yeah, we will
Troy.
teach you exactly how I trade this with options. I'm going to show you what kind of delta to look for, what kind of expiration, when to buy a call or put versus a credit spread. We'll cover all of that.
If I buy this class, is it mine to keep forever?
Yes, it's an on-demand recording, and you'll have access to that.
If I can't attend the class on the 30th, can I get a recording?
Yes, absolutely. You're going to receive actually multiple recordings. The previous class, this live class, and the 4 live market chat sessions during your membership.
Al is asking, what's the best time frame to trade if I'm a day trader?
15-minute and hourly, but again, we have many of our members trading 5-minute as well.
Rick is saying, Vince, thanks so much for the presentation today.
You're
Just
welcome.
signed up.
Great.
Just quickly, if you can tell me what happens at the end of 30 days for the pro subscription.
If you're enjoying the subscription, you do nothing. It'll just automatically renew at the end of 30 days at $97 a month. If for whatever reason you'd rather not continue, just give us a call. We'll put a stop to that. We always say we have the world's easiest cancellation policy.
Jazz was asking, you look for engulfing of body only and not the wicks, correct?
Correct. That's for the setup. For the trigger, you are incorporating the wicks.
Okay, Shelley is saying, Vince, I've enjoyed your systems in the past. I've recently bought winning momentum strategy. How is this strategy different?
They're similar in the sense that they're both based on trend and momentum. The winning momentum strategy has a couple more indicators. It's a little more complex, but this is a great system to start with. And again, the key here is the consistency year after year with this system. Now,
that leads me to remind you to talk about the free gift.
Yeah, the free gift. Many of you, when you signed up for this, might have selected a free gift from us, which is going to be a recording, a strategy video on the winning momentum strategy. But if you didn't at that point and you would like to, just send us an email at info@tradingwins.com. Okay.
Garrett says, I'm just starting out trading. I have a small portfolio. Will this system work for me?
Yeah, absolutely. Again, it works great with small portfolios. Really helps you build your account consistently. That's the key here. And you can start with one option contract or one lot of shares. Again, the amount doesn't matter. You'll see the difference it will make.
What credit cards do you take? You take American Express, Visa, MasterCard. We even take Discover. We take everything.
Anything.
If you want, you can send a check in. Don't send a check in. I'm getting a nasty look from the
just
building
don't give Jeffrey Gibby cash, because that I don't think we can we can trust.
No. He'll get it to us. He'll get it. He's a straight up guy. What's the best reason for attending the class? Last question.
You know what? There's so much material covered, and honestly, the best part is all the questions that people come with, different experiences, different levels, different backgrounds, and they lead to other technical analysis topics. So you're going to get so much for the small price we're asking. It's incredible. I encourage you to try it.
TradingWins.com/signal. Phone number is 1-888-574-2426. If we can't get to your call, please leave us a message. We will return your call promptly. We'll put the number in the session.
Can we also put the email in the chat, just in case anyone has any issues?
We certainly can.
Great.
Vince, I'll let you wrap up and hand it back to Jeff.
First of all, thank you to everyone for joining us today, especially during the long weekend. Thank you so much, and a special thank you to Jeffrey and everyone else at MetaStock for having me on. I'm really looking forward to the live event in Utah, and I really hope we can do this again.
I have one last question.
Sure.
People are asking, is there an automated scan tool as well? And there is.
Actually there is, and Jeffrey Gibby has...
Jeff stayed up many late nights,
yes.
Probably lost more hair than he needed to.
Yeah.
But it's an amazing system.
It is. He did a fantastic job on the indicator. It's got a great scanner that goes with it. Just send us an email at info@tradingwins.com. We'll get you all the information. So thanks again. With that, I will turn it over to you, Jeff.